How are you, journalist?
Yeah, well, there's lots to write about. I'm doing well. How
Yeah,
are you, Dale? Look good.
pretty good. Great to see you, Adam. Uh, we were talking about how even the shoeshine boy is bearish a dollar. All these different de-dollarization articles, China going to Saudi Arabia, brokering a deal between them and Iran, and all the country, China's going everywhere to try and get people to come along with the BRICS. Is the death of the dollar greatly exaggerated as it breaks out to the upside today?
I mean, I'll tell you what I've done. I haven't even written about that theme. I've seen it around and all the talk, and I don't know, somehow it hit the mainstream. But it's just so ridiculous to me that, the dollar, this reserve currency status really is a trade, right? I mean, the dollar's up and dollar's down on macro, but that's an untradeable theme.
Yeah.
And so I just dismiss it outright without even getting into the mess of those arguments. So
Okay. What the seasonals look like for April? That's another thing I want to talk to you is.
well, it isn't good for the dollar, that's for sure. April's that risk trade month,
right.
it's
So what's going on? People front ran it at the
they
end
sure
of
did.
March.
Yeah.
And do you think that's going to keep them long the S&Ps into a failure? Because they'll say, well, it'll come back. April's a good constructive month.
It might be, you're set up to kind of, if you get a little bit stubborn about that. And then the thing about seasonals is, it's not it's not ever a high conviction trade, right? It's a bit of a bias that you can work with. And if it's whatever, a pandemic hits, things change when the news changes, whatever if it's the non-farm payrolls or something else happening in the world. So you can get flushed out of it a week. It's really all weekends on seasonals. I love them, but it's only part of the package. So you can see people trying to pick it up here with the risk trade. And now, we're having a tough one here today, which I think today's trade is it's a retrade of non-farm payrolls. This is such a unique Friday release. The market chopped a bit, bonds were sort of open, sort of closed. And now this is kind of exactly what you would have expected Friday at 8:35 Eastern time with the dollar strong across the board on.
Yeah, because yields are lower. Seems like the correlation between yields and Japanese yen has kind of broken apart from each other, because the yen put in a higher low last week right there when the dollar put in a lower low.
I like dollar yen a lot. I like, there's a lot to like. It was the bank crisis sort of flushed it out. Then we saw this weekend First Republic cut the preferreds, which I thought maybe would kick up a little bit of dust again. Market seems to have handled it okay. There's just a lot, like technically, like you said, you have that higher low on dollar yen, and it's I think this is a good spot for that pair, because I don't think, I'm not sure this inflation trade ends that quickly, that abruptly. We saw non-farm payrolls pretty good. Initial jobless claims will be a big one this week, in CPI. Listen, I'd love to see a softer CPI, because this inflation headache has been a tough one, and I don't think it lasts forever, but it's still going to be around for a long time yet. It's still going to be around 4% at the bottom end, and that's the Fed says we want to stick with it until it's done. And you look over at 10s, 335. I could see the argument for lower, but the front end's still pretty strong. But Japan today was interesting too. New central bank governor, he did talk a little bit about hiking rates. You can't be any more dovish than Kuroda was for all those years.
Do you think that we're shifting away, say we get a good CPI number and yields fall, and that kind of happened last week? It didn't help the market, that the narrative is now shifting from fear of inflation to a growth scare.
It's that hard landing fear. And it has been an interesting.
Look at Deere. Yeah.
Deere. It's one I mentioned myself. Just brutal. Yeah. A lot of those. And all
of them.
So that, what I think the trade is right now is people worried about a hard landing, and that means the Fed staying high too long, right? So I think they're buying bonds a lot of it thinking the Fed isn't going to cut when they really do need to cut. And that, one of the things out there, and I hadn't heard this before, is that if unemployment falls or rise, the unemployment rate rises three ticks, so 3.3 percentage points from the bottom, it gets momentum at that point. Like historically, if you look at US unemployment, say it goes from 5% to 5.3%, it doesn't really stop at 5.3 historically. It'll keep on going. Now, we had kind of a 2 ticks rise 2 months ago, and then non-farm payrolls took one back this month. So we haven't done that lately. A lot of people waiting for signals like that. And the idea is that once the economy starts to slip or starts to fall apart, it really falls apart. And that's the hard landing idea. And the idea is that the Fed isn't going to be there to pick it up. So like kind of the Fed put is dead. And then at some point,
is that what Dr. Copper is saying too?
I'm getting incrementally more bullish copper on the supply side.
Well, I know you were down here for this big run, but you're still like buying dips in copper here.
I mean, I'm listening to the market here. I think you have to be careful. Number one, US excess savings are running down. The rest of the world is suffering a lot more from high interest rates. And we don't really have the all clear from the Fed. And I think there's a lot of people waiting in these trades where, okay, the Fed's going to be stubborn, keep rates too high. Then we crush inflation and everybody piles in when the Fed says it's time to cut. And with copper, and I think you got to pick the trades that you can weather that out. You have to have enough conviction in whatever you're buying to buy it early before the Fed makes that move.
Yeah.
Because I think if you wait, it's going to run and you'll be chasing.
They're going to ring a bell.
Yeah, exactly. And by the time the Fed tells you they're going to cut, it's in a lot of markets already. And there's just too much lack of clarity. So you want to find something where you have the conviction to buy it, ride out this recession, which I don't think can be that bad because you have 400 basis points of ammunition to cut rates. If it does get
they do have ammo now.
And so you have this, 400 basis points of hikes now is just 400 to cut later. And that's something like copper is where I want to be because the supply side is so damaged. The green everything is going to need so much copper, and it's cheap still.
I think you'll be able to buy it cheaper.
That's it. So everybody is on this trade where I like a lot of stuff, but I want to buy it cheaper. And so you can either say, listen, I like copper at 4. I'll still like it at 3. I'll buy half an hour, a quarter now, or wait in, or however the technique you want to use. And whether that's some stocks, whether that's whatever kind of market, I think we're not at the recession yet, but I think that the trade right now is after the recession.
Right. Yeah. And that, the thing is, there could be a lot of pressure and pain on the final wash, the final swoosh, right? And I mean, if the S&Ps are finally going to resolve themselves to the downside and take out 3,800 and trade under the October low, if copper puts in a higher low, above 3 while that's going on or washes down there, I like it. But I think the market is going to take everything down with it, especially if we're going to 3,200, 3,300. I think it's a liquidity issue.
And we have to test the Fed. I mean, if the Fed really is as stubborn as they're acting and inflation does hang on, it's tough. And I think that's why people are going to gold right now. They're saying, and that's the same trade. Well, they're going to cut eventually. So you have 400 basis points of easing in there. That's coming at some point. Gold's at 2,000 now. What does it look like when the Fed's back at 1%? And you say, well, maybe gold goes back to 16 or 1,700 if some kind of flush for whatever reason. But I could kind of swallow that. I'm willing to
I think it shouldn't take out 1,800 on any washout here.
So, it's just sort of missing the next trade, I think, is what I'm mostly worried about now because, recession. And, I think a lot of people, when they say recession, right, we think about either, the fear around the pandemic or the financial crisis, right? And the financial crisis wasn't a garden variety recession. Or even you think of kind of like 2000 in the US, which was a very shallow recession, but tech got washed out, right? So people were worried about those 50% drawdowns. I don't think it's there. Tech
Okay.
is so much more resilient now. Cyclicals are so cheap, and there's not, the market itself is a little bit expensive, but tech is tough to fight. Given, I don't know, what do you think of artificial intelligence, Dale, and everything that's happening there? I mean, that's the trade.
I could use a little. Because my natural intelligence starts to fade a little bit with time, but I could use a little AI to give me a boost.
It's,
But uh, there's this guy who writes a book about what it's going to be, and we're going to be like androids and everything. In 70 years, we're going to be bionic
I
people.
mean,
The only robot I like was on Lost in Space.
okay.
Okay. Danger, Will Robinson. Anyway, so we have this transition or final capitulation in it. Gold's been acting great. Any currencies that you favor during this transition, or what would be, you like US dollar yen?
So,
I
dollar
could
yen
see,
right now. I mean,
yeah.
yields a lot. I'm thinking of watching a lot of bonds right now to see if we get. I mean, I think everybody got long pretty quick there, but everybody wanted to get long the whole time when it was up. You had twos at 5%, and
Yeah,
the last time, when you get 4% tens.
that's a bullish formation in TLT, which is a proxy for the 20-year. It's an ascending triangle knocking on the door of a breakout at 109.
I think a
This
lot
is,
of it, mentioning AI, is people want to be long duration now. I think there's this sense out there that AI and technology is going to be disinflationary again.
oh, okay.
That your opportunity to get 5% in fixed income, not necessarily treasuries, but if you go down the
Yeah,
corporate ladder, is going to be very limited in 3 or 4 years. And so there's a bit more of a pile in there, and a lot of uncertainty in stocks too. So it makes sense that some people would want the safety.
are people worried about the banks in Canada? And do you think that we, put a nice patch on the problem here, and that we're through it, or there are more repercussions coming?
It's the hold to maturity problem is so hard, right? They hold these bonds that are, they market at 100, they're worth 90, and they're technically in a lot of pain, but they can hold them to maturity, right? And they're allowed to hold them maturity, and you don't have to sell them unless your depositors flee. So the whole kind of thing is held together with duct tape, but it works, right? Because the depositors, meaning if they start to flee, you can pay these sort of higher deposit rates. If there's no run on the bank, people, even, you see, I can't remember what bank it was on Thursday, put out how much deposit outflows they had. It was one of the ones that had been really beaten up. It wasn't that bad, because you have most accounts at most regular banks are $250,000 or less.
Right.
But I think it all holds together here, but it's banking, right? Like it's such a black swan whenever it happens. I mean, there wasn't many people out there, even in hindsight, of the millions of people watching markets that were, banging the drum saying you got to short these regional banks. So, I mean, it's so tough to short. That's what they say whenever it's like the movie The Big Short. So rare that somebody makes money shorting that they make a movie about them getting rich.
Yeah.
It's the timing of it's brutal. And so,
Well, isn't the next symptom? So say that was a heart attack, and then the next symptom, the result of the heart attack is, you really can't go out and run a 10K anymore, right?
yeah,
So,
can't lend.
then so, and then, you get sedentary, and it turns into, credit contraction. And rates don't really matter, do they, Adam, if you can't get the credit?
It's a fair point. It is a fair point. I think the Fed was saying, well, it's 25 basis. We think it's 25 basis. That seems a little suspect to me. I mean, if you're not lending at all, it's like 1,000,000 basis points, right? There's just no credit.
Yeah.
And you hear about people pulling lines on cars right now, like the big credit providers on inventory. Commercial real estate has been well flagged for a while as a potential problem. Obviously, office real estate looks bad for secular reasons. So that I think it's you've seen it a million times, that these are so well flagged that it never seems to be the thing that everyone's worried about that takes it all apart. And so I don't know. I think it's contrarian to be a little bit optimistic at the moment.
Okay.
But is there a trade there that I really like? I mean, can you be short the dollar right now? I don't really think so. Do you want to be long the commodity currencies until China really shows some life?
The
I
Aussie
don't
has
think
been the
so.
weak sister during this whole dollar decline.
Very strong seasonally, but RBA now, kind of the bad news is out there, right? They're done. And then the RBNZ last week, they hiked and it didn't get any juice there either. But I'm not seller there either. So it's just there's just not a ton of conviction trades in the FX market. The euro, I don't like a dollar yen to me seems to be just a solid place to be right now. And
Yeah.
everything else. Bitcoin is it's an
Yeah, what do you
interesting
think?
chart.
Yeah, we got a little triangle here. I was thinking maybe one more thrust to clean out all the stops over, these two peaks, maybe rally to a little bit above 30,000. And I guess if you're an Elliott wave guy, yeah, I guess you could call it a flag, but it could also be a wave 4 triangle. And the next push up is the last one before we get a sell off. See, I think everything's going to be pressured. Gold, Bitcoin, everything by risk off, pretty good risk off event into the summer.
Well, if high CPI tomorrow will really kick it off, or day after tomorrow, whenever it is.
Or a good CPI and the markets and yields drop, and so does the S&P. So,
Yeah,
I think that's a hook, don't you? I mean, everyone's going to say rates are coming down. Why aren't my stocks going up?
yeah. I mean, the
If,
dollar would come down too. I
a
mean,
dollar goes up. It's bonds go higher. We have that breakout. The dollar continues to be strong. Gold corrects, and the S&Ps puke.
well, I'm not on that trade yet. I could see it coming together. I think it just
All right.
feels crowded to me. That for
Really?
crypto, while you have it on the screen, if people want to know, the trade for me is long Bitcoin, short everything else. I don't know if there's a crypto trade that I like by itself, but I feel
okay.
Bitcoin has clearly separated itself from everything else.
Yeah.
There's not a lot of use cases within crypto. There's not a lot of money going into it now, fresh money. And, the regulators are there. The regulators are bad news. And I don't know if I want to be short Bitcoin. I mean, I think I wanted to be before, but it had a pretty impressive move from the lows.
Did it define itself, Adam, on this last run because of what happened with banks? That what it is people always say, what's Bitcoin? Oh, it's
but
a
what
commodity.
what ultimately did happen with it? You buy it on kind of a collapse in the banking system. Well, the Fed guaranteed all the deposits. So,
yeah,
then, yeah, you kind of bail out nation again. And that's kind of bullish, but, it's not, this wasn't, that's a pretty big move. I mean, it's like a 50%
huge.
move.
Yeah, huge.
And,
so, I mean,
but what really happened, should it come out?
It's a safe haven, Bitcoin.
But I feel like Bitcoin goes back down, everything else will go back down more. So you can pair up the trade.
All right.
You're not going to get those 50% gains, but the rest of the field, sell the field and buy Bitcoin.
An interesting idea. Anything that you want to cover that I haven't thought of?
We didn't touch on oil. We always touch on oil.
Oh, yeah. And that's really important.
So look at this trade. It's an interesting chart, right? Because you had that, I don't know if you can put it on the same timeline or a bit shorter. You went down, same as Bitcoin, looked like it was breaking down.
Yeah,
and then back up, right?
Yeah.
And if it can get through the top of the range, now I don't know what's going to take. Because we've seen the pretty whatever the card that OPEX played, the Trump card, and it hasn't kicked through the top of that range. But 5 days in a row here now, sideways, you've got that gap to the downside, which you have to be cognizant.
Maybe it works into it before the next wave. This is one that if we had a big risk off move, might be one I'd be looking to buy.
Well, I mean, but if it's into that gap, I mean, I'm not buying it in that gap, right? So it's 75 is maybe where you could start to look to pick it up. I mean, it was interesting. It held up okay after that flush, which was really, the specs were really caught out there. What happened with oil is the specs were long. They got absolutely flushed out, took it lower than it probably should have gone. the bank stresses weren't as bad as it, it wasn't an imminent collapse of anything. And then OPEC comes in. Now, the real thing is if you watch jet fuel, if you watch China, there's a lot of demand in the pipeline, right? There's going to be a lot of flying, international flying this summer. The consumer's still in okay shape. There'll be plenty of driving. India's still picking up. And if China can get going, there's not enough oil out there. And then Russia's such a mystery as well, because the idea is that their equipment is degrading, right? They don't have the expertise or the capital to invest in keeping it updated. Then
How many
again,
times
the
can
Russian
US
machine doesn't seem to break. So that
how many times can the US poke the tiger in the eye?
Yeah.
Without him just, sanctioning the Reagan Library and
Listen, I don't know how this is going to go. It doesn't seem to be going that well for Russia right now. I don't know if this Ukrainian offensive is a bluff or what. But that is either going to happen, and we'll see. And I don't know if Europe is as on board as it was.
Macron wants to bring back the French franc.
Well, it was interesting. He was
I'm kidding.
stuff
But
out there this weekend.
yeah, what's he doing in China with Xi, saying that we need to be less dependent on the US when he should have been back manning a fire hose to put out the flames on the streets of Paris.
I mean, well, it's so funny, Europe, right? And the UK does this once in a while. So, well, we're going to get things going again here, right? There's this empire in decline sense about all of Europe, right? It's eroding its place in the world. And so you're not going to fix that though with foreign policy. You got to fix it with productivity. You have to fix it with an economy that builds things that the rest of the world wants. And
except Greece, though, Adam.
And you try to raise the pension age, right?
Greece is never in decline.
You try to raise the pension age 2 years, and they burn down the city. So how are you? It's just talk. You can't fix this problem. With the political climate the way it is in Europe. So Europe will screw it up. It's the same thing. A little banking crisis in the US, it wipes out Credit Suisse. And you can't. You can trade the euro or sterling, but you can't.
I want to start to wrap it up and think about this. SVB owned bonds when rates were at 130-year lows, like the Civil War. So say they bought the top of the 10-year note market when they were 1.6 or 2.
Yeah.
Okay, so that's been painful. Wouldn't it be that much more painful for banks in Europe that bought paper at negative interest rates, that they not only have principal losses, that they have to pay that interest to service a bad trade?
But yeah. I mean, they've got to be everyone is underwater on the same trade. Insurance companies, presumably. I mean,
pensions.
You had to be just short duration, then it's fine, right? So if your duration was 2 or 3 years, well, now you're buying bonds that those come up to maturity, and you're getting something that gives you 4%.
How do we get out of this?
Well, it's just time. It's just you need, and they pretend that the losses aren't there. I mean, it's a loss, but you kind of know what the loss is. And again, I struggle with that hold to maturity question, because you can see, well, it should be mark to market, but you don't have to, and you don't really have to take the medicine at any point. I mean, it's bad for profitability. I think the run on the banks could be if you actually had competition for deposit rates. You started to see banks offering 3%, and then you get capital moving around, and you start to squeeze some banks.
I actually got an offer. U.S. Bank has some type of treasury fund offering 3.5. So they never sent anything like that before.
But I don't know, Pete, do you think there's really, are people really going to chase that? I think people are just too, most people are too lazy.
My thought was, I'm not even sure I want to have a lot of cash sitting there.
Yeah. So,
banking
is a service, right?
Yeah. Well, you know what? You are too, to the whole community that trades these crazy markets every day, every week, Adam, and always love batting the ball around with you. buddy.
It's
And
nice at the start of the week, Dale, and
yeah.
it's going to be a good one here today.
Yeah, every week we say is critical. And every week it's critical to your livelihood as a trader.
Yeah, and I think for today, you know what, this is non-farm payrolls trade now. This is kind of what should have happened on Friday, and we'll see where it goes from here.
Okay, well, everyone, you can follow Adam on Twitter at FX_button, see all his stuff at Forex Live, one of the best news traders out there, and uses his journalistic skills to, keep you informed with his articles about what's happening in the market.
Thanks,
Thank
Dale.
you, bro.
All right. Let's
All
have a
right.
good week.
All right, my trading warrior brother, Adam Button, everyone. Thank you, Adam.
Always a pleasure. Take care.
I'll be talking to you soon.
You got it.
All right, Adam Button, everybody. Hope you enjoyed it. Pay attention to what Adam had to say, and could join the team in 16 minutes on the morning edge. Good luck today, and we'll see if my narrative plays out over the next few weeks. Dollar, did it break out? Blake showed a breakout of his trend line. I have it right there. Okay, adios, everybody. Remember, don't just count your pips, count your blessings.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.